Good afternoon, everyone. Noontime, 12:25 p.m. on Friday, April 16th, 2021. Hope you had a great week in the market. This is my first video for the week. It's pretty busy this week, so I didn't get a chance to do much in terms of making updates. But I'm going to do this one today, and I might do another one over the weekend. We'll see. But I had a little time this afternoon now that it's after 12 and the market's kind of settling down for the weekend. Then I figured this would be a good time to leave another one. So as you know, we've been discussing on the last few videos about trading off currency indexes. And one of the things that I had mentioned on those videos, I think in the last one especially, was that the currency index market charts that I was using on TradingView were the actual indices that trade only during the New York session, so only from 8 a.m. to 5 p.m. New York time. And I felt like that was kind of limiting a little bit because it didn't allow you to trade at all using that methodology during the Asian session and half of the London session, and really only gave you a few hours in that kind of London-New York overlap. And I felt that was a problem because, what happens, as I said, after about 11 a.m. or noontime on most days, on the, New York time, the markets just tend to start going sideways. Not always. Sometimes there are impulsive moves that continue into the afternoon hours once London closes during the New York session. But a lot of times things go sideways, and you can see it on the charts. I mean, you can just go and look. Bring up a 1 hour chart and look at what happens during that noon, 11 a.m. or noon until 5 p.m. New York time, and just see most days you're going to see mainly sideways price action or even reversal as traders take their trades off for the day, and it sends prices back the other way again. Now, it doesn't mean they won't continue in the main direction the next day, but if you're a day trader, that was going to really be a limiting factor. So I started thinking about what else I could do because I did like the system, but I wanted to give myself a little bit more flexibility. And so if you just go online and Google currency strength indicator, MT4, MetaTrader 4, or, you don't even have to put MetaTrader 4, but you're going to find tons. And some of them are free, some of them you have to pay for. And quite frankly, TradingView might have one as well included in their platform, under the indicator section. Those are usually ones that their regular members create and just upload and put into kind of the community library of indicators. But since I use MetaTrader 4 for my trading, I wanted to see if I could find something that would suffice for that. So I found this one. Now, this is actually a package of 4 different currency strength indicators, 4 different versions. And I'm not going to show you the other ones because, quite frankly, I'm not using them. This is the only one I use of the 4. This was actually, like, they called it a bonus one. It was a pack, and I did pay for it. And I probably didn't need to. But I wanted to see what all the other ones do as well. I didn't pay a lot, so I'm not even going to really talk about that because it's not important. Because, like I said, you can probably just Google, like I said, currency strength indicator, MetaTrader 4 or 5 or whatever it is, whatever platform you're using. Or go into TradingView. If you use TradingView, go into the indicators and see if you can find something that plots like this. Now, this looks a lot like the one that I was using in TradingView, the indices, but this is not tied to an indice. This is just the raw price data plotted as a line for each of the 8 major currencies. Okay, so what you can see here, and I know you can't see the because of where I have the screen cut off, but each one of these colors represents the 8 major currencies, and if I hold my mouse over it, well, it usually shows. anyways, I can tell you because I'm looking at the guide over here. This is the Swiss, this is the Euro, this is the Yen, US dollar, Canadian, Kiwi, Aussie, and Pound. Doesn't really matter for the sake of this video. I'll get rid of this line. And then you can see there's a zero line right here. And so these are plotted by percent change over the last month or so. So you can see right here, I know you can't see off to the left here, but it says currency change since March 19, 2021. So it's about a month's worth. And so it plots it as a percent difference over the last month. Okay, and then it just stack ranks them. And of course, as you go through the different time frames, it's going to look a little different. I'm on the 30-minute chart right now. I like to find my setups anywhere between the 15-minute and the 1 hour, which is what I mentioned on the when I was using the trading the currency indices on TradingView. So that really hasn't changed. I skip around between the 15 and the 30-minute and the 1 hour because I mainly day trade this. But like I said, you can use any time frame. If you go out to a 4-hour chart, this is going to look different. And if you're a longer term trader, you can use the 4-hour chart. So I mean, if we go to the 4-hour, and it takes a minute for this to load because it has to refresh the data, you can see, the lines look different. The stack rankings are gonna change because again, it's stack ranking these based on a percent change over the last month. So the Kiwi over the last month on a 4-hour time frame has had the biggest gain, plus 6.5%. And the yen has had the biggest loss at minus 6.5%. So that's why they're opposite each other. But really, you're just looking at them stacked ranked, and I'm looking for divergences and crossovers. So I'm not necessarily looking for, I don't necessarily care how they're stack ranked, to be honest with you. So I'm going to go back to the 30-minute here. Now, what you want to make sure, in my opinion, if you're going to find one of these online and download it, whether you pay for it or whether you find a free one, and I would encourage you to try a free one. And I would also say this, because I Googled it and I found, just on the first page, I found 3 or 4 different websites that had something similar to this that you could download the file and put it onto your MT4. If you're going to do that, I would definitely recommend to download at least 2 or 3 versions, put them on your charts, and make sure that they all look the same. I don't mean colors, but I mean if you put one on your chart and it shows the Swiss franc, kind of like sideways like this, then you put another one on your chart and it shows the Swiss franc like plunging down or plunging up on the same time frame, then there's something wrong there because it's how that indicator is calculating those lines. Okay, so what you want to do, and I'm just going to show you something here, and this is what I strongly advise you do. Let me move this over so you can see it. So here are this is this indicator you're looking at on here. It's called currency change, original name, but that's what this is. And of course, these are all the colors. But if I go into the inputs, see where it says here smoothing period 1? That means it's just the raw price, okay? It's not taking an average. A smoothing period would be an average, like a moving average. If this said 20, then these lines would be taking, if you were on a 1-hour chart, it would be taking the smooth average of the last 20 hourly prices of each one of these, and it would completely change the look of this. Okay, I don't want to see it smoothed out. I want to see the raw, actual, real-time price. And so that's why I like this one, because it says smoothing period 1, which means it's not looking at anything in the past in terms of calculating the current view. The only thing it's looking back on is just to measure the percent change, this right-hand column that I was mentioning before, and how it stack ranks these. But in the actual calculation of each line, it's not using any look back. It's showing you the actual price. And so it's going to update if you got it on an hourly chart, it's going to update every hour. If you do it on a 15-minute chart, it's going to update every 15 minutes. Okay, it's applied to the close. All right, so when that 15-minute candle closes on the 15-minute chart, it's going to update this line. Okay. So that's why you're not going to really see it moving much. Now that's a little bit different than the indice one, because if you go back and watch the video on the TradingView one, that was a live market where they were actually fluctuating real time, which is kind of cool. But again, the drawback to that was that that market only allowed you to trade during the New York hours. And again, for half of that day, it's pretty much useless, because once London closes, the markets really just kind of move sideways for the most part the rest of the day. So I don't really need to see, and if I want to see it updating real time or as close to real time as possible, I could go down to a 1 minute or a 5 minute time frame and I could see it fluctuating frequently. I don't really need to the way I do this. So the 15 minute to 1 hour is perfectly fine for me. So I would say any of the ones that you download, just try to go into the parameters of the indicator. If it doesn't tell you on the website how it calculates it, once you install it, if you go into, and I'm sure if you plot on MT4, you know this is. Let me bring this over here. When you right click on an indicator and you bring up the properties, this is what you'll see. This actually is showing you all the indicators on this chart. So it's this one. So it's currency change. That's this indicator. So let me just start from the beginning. And again, I'm sorry, you guys probably know this, but you can either right click on the indicator or you just right click anywhere on your chart and you'll see indicators list. And I need to drag this over because it keeps putting it on my other monitor. This will bring up all the indicators that are currently viewing on your chart. Now you have to just plop this onto any chart. So I just opened up, this happens to be the Swiss yen. It doesn't matter because I'm not looking at the Swiss yen price. I just squished it up top here. But I applied a template that uses this price info widget over here and a couple moving averages. But again, I'm not even looking at the chart. You just have to open any random chart just to plot this thing on. So anyways, so currency indicator, currency change, then you hit edit. And this is going to open up the parameters for this indicator. And again, what you want to make sure is that whatever they call it, smoothing average or look back period or whatever, is just showing as 1, okay? And because that way there you know you're looking at the actual raw current price that's updating every time a candle closes on whatever time frame you're looking at, okay? If this says anything other than 1, I wouldn't use it unless you can change it. Now I'm sure I probably could change this to like whatever I want. If I wanted to change it to 10 or 20 and it would smooth out these lines, not have them be so choppy. But I want real-time data. I don't want look back for this particular thing. Okay. If I wanted to look at something smooth, I'd just use a moving average, quite frankly. So, all right. So if you're going to try whatever ones, if you're going to try this and you're going to look for free ones, great. I would definitely encourage that. Just make sure that it's real time. Plot 2 or 3 on the same chart, because there'll be different indicator windows, and just look at them all next to each other, on top of each other, and the lines should pretty much look the same on this. If you're looking at the same time frame on each one, they should look the same. And if one of them doesn't look the same, or they're all over the place, and it's how they're calculating the price. It's how they're calculating this. That's what's causing it to not look the same. And then you need to go into the parameters and see why that is. And again, what you're looking for is the actual raw price data, not a look back period. Okay, so that's my advice on which one to pick. But so let me close this. And again, this is showing the raw price. Now, what I did is I add period separators. So these vertical lines represent the beginning of a new trading day, which on my broker is the start of the Asian session, which is 5 p.m. New York time. So each one of these dotted lines is 5 p.m. New York time. 5 p.m. New York time, which is the start of the Asian session. Okay. And this line that I drew on here manually, this is 1500 hours. This is the start of the New York session. I happen to just draw this one on today. So that's this pink line happens to be the New York session start today. And of course, these lines will continue on for the rest of the afternoon until it hits 5 o'clock right about here, and then they'll stop for the weekend. Okay, and then on Sunday night, this will start up again into next week. Okay, so that's what you're looking at with these lines. Okay, and so basically what I'm looking for now. The other thing is I'm traditionally have not been a big trader during the Asian session. The Asian session tends to be quiet. It also tends to kind of go what they call it the Asian drift. Well, you tend to see prices go the opposite way that they moved most of the day during the New York and London sessions. Prices kind of like go that's why they call it the Asian drift. And again, it's not universal. But again, if you went back and looked at your charts, take an hourly chart, and look at where price goes during the day and then where it goes during the Asian session, many times you'll see it go the opposite way. But generally, it's pretty quiet. Unless there's news, then things can be a little bit more aggressive. But as an additional opportunity for me to find some other trading opportunities, because I can't really trade during the London session, at least the early part, because it's the middle of the night. As I talked about before, London opens at 3 o'clock in the morning my time. And I'm sorry, I'm not getting up at 3 a.m. to trade. I'm just not doing it. So I still can trade part of the London session. I can get up at 5 or 6 and you're a few hours in, and sometimes it takes that long for things to get going. But and as I also stated at the beginning of this video, the New York session is fine, but only for part of it, only up about halfway through it. The second half of the New York session tends to be pretty much useless. So I was really limiting myself. So I said, you know what, let me look at this during the Asian session. And I found some really good trades this week. And so if you look at, if you could just look at a couple of examples here of, so here is, some time during the, well, let's even go back here. So this was 2 days ago. This was the start of the Asian session. You can see the first part of the Asian session is usually, for about the first 2 hours generally, is very quiet. Now, the first hour of the Asian session, I would never take a trade. I don't, any circumstance. Because you're going to find during that first hour, there's very little liquidity in the market. Prices tend to flop around, and you usually see the spreads are going to really widen on your broker, especially on less traded pairs. So that first hour, I don't even look at anything. Beginning around the end of the second hour, in that second to third hour, I will start looking at this. So somewhere around where you see the crosshair and that vertical line moving is about where I'll start to look for things. And you can see there were a couple of good trades this week. So for instance, on this day, you could have traded, at this time, you could have traded, this is the Swiss franc seen sharply moving down during the Asian session, and the New Zealand dollar sharply moving up. That's a good trade right there. That's the Kiwi Swiss long, right? Or you could have taken the Kiwi against the Canadian. You see the Canadian dollar moving down, and you've seen the Kiwi moving up. You had the dollar moving down. You had the pound moving down. I think this is the pound, or this is the yen. And so again, you're just looking for divergences. And like I said, I wait about 2 to 3 hours into the Asian session for things to kind of set up, and then I'm looking for these divergences, and I took some really good trades this week. And then again, whether you decide to keep those heading into the London session, so I played around with that a little bit, because then the problem is, so I'm going to bed 11-12 o'clock, which is 3 to 4 hours before the London session opens. So I have to make a decision. Do I keep those trades running and hope that they don't reverse and go back the other way while I'm asleep, and I wake up in the morning and I have a loss when I went to bed with a profit, or I'm back to near break even or whatever, or do I let them run and hope that that trend continues during the London session? Do I put a trailing stop on there? I don't know. So for the most part, I found that closing them before I went to bed was the best method. But again, there's nothing universal, and that's a decision you have to make, because sometimes they will continue. The other thing I would recommend is that if you're going to take a trade during the Asian session, that whatever pair you trade, make sure it has an Asian-based currency in it. So that would be obviously the yen, the Aussie, the Kiwi. I would make sure that whatever pair you take has one of those three currencies in it. I wouldn't necessarily take one that does not contain that. Now, it doesn't, again, there's no universal, but I wouldn't take like the pound Canadian during the Asian session, because more than likely that trend is not going to continue for the London session. And more than likely, it won't really even have much push during the Asian session, because those two currencies are not Asian-based currencies, and there's just not going to be as much demand. You just got to think about the markets that are trading during that time. These are traders in Sydney, Australia, in Tokyo, and so that's their focus. Okay, so whatever pair you take, make sure it has an Asian component to it. So I'm definitely going to be looking at the yen, at the Aussie, at the Kiwi during that time. Those will be the three kind of leading ones that I look at, and then I'll see if I can match it up with something else. So there was some really good trades in here. And like I said, you may not get as much volatility and movement as you get during the London session, but you can definitely do it. And for me, because of where I live, I found that to be really helpful. So again, this is a decision you have to make depending where you're watching, where you are in the world. The Asian session may not be tradable for you. I mean, if you live in, Europe, trading the Asian session's probably not an option, because again, that's probably going to be in the middle of the night for you. But for me, being where I am, it works. And the early London session does not work for me, even though we all know that the London session is where most of the action happens. That's where most of the moves happen. There's no doubt. But you can't change that. It's you got to sleep sometime, and that you are where you are, So anyways, so that's how I did this. So I will look for trades during the Asian session on Asian currencies starting, like I said, at least 2 hours into the session. So around 7 p.m. New York time, I'll start looking at this. Between 7 and 8 p.m. I'll kind of let things shake out, because sometimes you're going to get pushes in one direction, then it goes back. This is the yen. You can see what happened. We had a little push up on the yen, and then it went down the rest of the session. So at first you're like, oh, this thing's going up, and then, oh, nope, sorry. So, I mean, this can happen. And the yen does tend to be a little bit crazy like this. And this is 3 hours in. You can see this is 3 hours. 3.5 hours in, and then all of a sudden. That's why I tend to be patient, because I'm going to let these run for, 4 or 5 hours, and then I probably will exit them. And then, so the start of the London session is 10 a.m., 10 o'clock on this broker. And so right where you see the vertical line, the crosshair now, is the start of the London session. Okay? And then 1500 hours on my broker, this is the start of the New York session. So you can see what happens for London. On this day, for the most part, the trends continued. Okay? But you will see some volatility at the start of both sessions. And you will tend to see prices, jump around a little bit as that market opens. And some days they're going to continue, but on other days they'll go completely the other way. So again, that's why I said you kind of have to make a decision, whatever you're comfortable with. Are you just going to session trade it and then get out kind of as a day trade? Or are you going to try to hold it? Now, it's good to know what the fundamentals are, why the market's moving. You should be keeping an eye on your news feed. If there was any economic releases from Asia during the night, that could definitely propel things to continue. But if there's no news, if there's nothing really driving prices against the larger trend, there's a very good chance it's going to reverse when London. In other words, let's say the Kiwi dollar was trending up. For some reason during the Asian session, it was trending down. But there was no Kiwi news. There was really nothing going on. It was just drift. It was Asian drift. It was a very high probability that when London reopens, it's going to go back the other way. So it doesn't mean you can't take that counter trend trade during the Asian session, but that's one I would not hold on to. So it does have, it is important to kind of just keep an eye on, what the sentiment is, and keep an eye on your news calendar. look on a site like Forex Live or Financial Juice and just say, is there anything going on? Is there anything causing these prices to move, obviously? And if not, then is it moving against the larger trend or is it moving with it? If it's moving with it, then you probably can safely hold it into the London session. If it's a counter trend trade and there's nothing driving that, it's just drift during the overnight hours, I would definitely cut that trade loose before I went to bed. So, and take whatever profit I had and just call it a night. So, all right. So that's just my advice. But again, you got to do what you're comfortable with. But this is really the main thrust of what I wanted to show you, because again, this indicator is real time. Of course, it's only going to update, depending what time frame you're using. It's only going to update, every so often. It's not real time fluctuations per se. So again, if you're on a 30-minute chart, these are only going to update over here to the right every 30 minutes. Okay, but again, if you need to see it adjusting more frequently, you can drop to a lower time frame. But the thing that happens is as you change time frame, these stack ranks are going to change, because of course it's measuring it over a certain number of candles. If you remember when I brought up that that characteristics box, I think it said up to the last 1,000 candles or something like that. So depending on what time frame you use, these stack ranks are going to look different, and these are just going to look different, and that's okay. But I like to use the 30-minute to the 1 hour as kind of the benchmark, because the other thing that happens if you go to too short of a time frame, it flattens these out. In other words, these moves, these little spikes here, end up looking much more flat because you're stretching it out over more candles. So instead of this, it's going to look more flat, and it's kind of hard to tell what's really going on. You're going to see more distinction the further out you go on the time frames. You're going to see more clear-cut moves. But again, if it's too long of a time frame, though, you may be late to the party. So where you're not going to catch those divergences happening, unless you're going to just take a trade and hold it for a long time. So if you take today, for instance, obviously, the pound was on the move today. So trading the pound against the Kiwi was a good trade today. Taking the pound against the Aussie was a good trade today. Maybe not so much against these other ones. So if we go and look, let's just take a look here. So here's the pound Kiwi, and look at this. So I just said, right, good day for the pound today against the Kiwi. Look at this move. Now this started right at the beginning of the London session. It's 10 o'clock on my broker. That's the beginning of the London session. Now again, I wasn't awake for this. I would have gotten in probably somewhere around, if I had seen this, probably not until about here. This is about an hour before New York opened. It's still not a bad place. I mean, even if I had just done that, and I did not take this trade, I'll tell you. I took the pound US dollar, which I'm still in, but I may close that by the end of today. But 122 pips in in about 5 hours. Okay, 122 pips in 5 hours. Okay, all based on this view of the pound going up and trading a counter trending a currency going the other way. And this is a 30-minute chart. Okay, and if we look at the pound Aussie, I'm sure it looks the same way as the pound Kiwi. Here's the pound Aussie. Let's go to the hourly chart, and it looks almost identical. Those two track very closely to each other. Okay, so the pound, was strong today. But so again, it's the same thing here. I mean, if you had traded this from the London session or when that crossover first happened, it's 114 pips, right? It's a couple less pips in this pair than the pound Kiwi, but it's still a pretty pip-rich pair. It's still pretty. It moves really nice. So this is what I'm talking about. So again, this is at the beginning of the New York session. I start looking probably about back here. I get up a little early and I start looking, and I'm looking at it, and those divergences started happening, just before the New York Open, and then they accelerated during the New York Open. I was a little hesitant because I do find sometimes that the pound reverses direction during the New York session. If it's going up during the London session, a lot of times I'll find that it reverses in the New York session. So I'm always a little gun shy about taking those, but it did end up following through today, so that was good. And you can see for the most part, the rest of these were kind of quiet today. Here's the Swiss. We had a little bump, but for the most part, it's been trading in a pretty narrow range since back around the beginning of the London session. The euro's been pretty flat. The yen was down and up. The dollar's been chopping around. The Canadian has been up a little bit. So this is really today your best combinations really would have been the Aussie and the Kiwi against the pound. And so that's what I'm saying. Like, you can look at this and very quickly, determine what the best trades were or would be for the day. Now, the problem is, of course, is you want to make sure you catch them when they happen. I mean, if you're seeing this 5 hours later and it's already moved, well, it's probably too late. So there is a little bit of timing where you've got to be around when these things start, which is, again, why I can't trade the London session, because by the time I wake up, these things have already happened, okay? Like back here, well, this is still during the Asian session, but if I go to the start of the London session, right out of the gate, there actually really wasn't much today right out of the gate, so I really didn't miss anything. Nothing really got going today until an hour or two before the New York Open. So it can vary every day. But having this available for the Asian session gives me an option to look for trades during the Asian session. And again, I'm going to be very realistic on what I take. I'm only going to take pairs that have an Asian-based currency in it, and I'm going to be realistic on how far it might go, and I will strongly consider exiting the position before I go to bed. So I'll hold on to it 4, 5, 6 hours, unless I have other fundamental reasons to believe it's going to keep going, then I might hold on to it. But if it's just kind of, no specific reason why it's moving, it's just kind of, drift, those are the kind of ones I'm not going to hold on to, through the entire session, because there's a good chance it'll reverse and you end up giving back everything you made. You wake up at the beginning of the London session or a couple hours in and you're back to like break even. And it's like, you were up 50 pips and now you made 2, so like, what's the point of even being in the trade? Because you made enough to cover your spread. That's about it. So this is what I wanted to show you guys. And again, this is what I paid for, but you don't necessarily have to. If you're gonna, but I just really kind of want to show you the power of this, because what ends up happening, guys, by using this, you don't have to sit there and analyze. I mean, if you look down here, you look at all the combinations of just the 8 majors. There's 20 plus, 25, 20. I don't know what the number is. 20 to 30 combinations of pairs, just using the majors. Okay. And, to sit there and analyze each one of them as a pair and try to, see what it's going to do, you're missing the obvious, which is, there's a likelihood that there's one in that pair, there's one currency that's actually driving it. And the other one is either going the opposite way or it's flat. And you want to pair those up. You want to pair weak against strong. Okay, ideally, you want to completely diverging directions, like I said, Aussie and the Kiwi against the pound, for example, or one that's flat. Now, you could have gone like, what is this? This is the euro again. So let me just look at euro pound. So the pound was really up today. So let's see if euro pound went down today. Now, you see the euro is pretty flat. So let's see what the actual motion was on the pair. So here's euro pound, and you can see it did go down, right? The pound was pretty strong. It made about a 50 pip move today. Okay, and this probably goes back to the beginning. Yeah, this is right here is the beginning of the London session. Right there at the top is when London opened, and it went straight down. And so you could have picked up 50 pips, even if you weren't going to hold this trade past today. You could have gone in here, picked up this 50 pips. A 1 pip spread. This is a pretty heavily traded pair. The daily average, it only moves about 45 pips a day on average. So if you got 50 pips, I'd probably be looking to get out. you've pretty much made where it's going to go for the day, most days anyways, and that's it. So this is a little widget I have. I found this a long time ago. I don't even know where I found this, but this is a great little widget. Shows you the current price, shows you the spread. I don't use the pips to open or high to low or anything, but I look at the spread, before I take a trade, so I don't have to like figure it out. And I take I look at the daily average, and this tells you about how many pips a day this thing is going to move, and this can adjust over time. It takes an average. I don't know how many look back days this uses, but that's what this daily average is. It's the approximate number of pips the pair will move each day. So it's a really nice little quick snapshot. But anyway, so there's the euro pound, and it's pretty cool. So I really like doing this. I had a really good week with it. I did have a few losses. I jumped in on Monday on a couple of trades, and I lost both of them. And I do find that Monday is not the best day to trade. Monday is usually a setup day for the week. Things kind of fluctuate. If you go back to like a Monday, you go to the hourly chart here. Go back to Monday, which was, what was Monday? Monday was the 12th. Let's see here. So this is today, Friday, Thursday, Wednesday, Tuesday. So this was Monday right here. So here's Monday right here. And for the most part, you can see nothing really happened on Monday, right? The CAD kind of drifted down, but the dollar is pretty flat, right? The pound kind of just chopped up and down. The euro chopped up and down. The Aussie kind of, drifted down, but chopping up, The Kiwi was flat. The Swiss was flat. And this is the yen. The yen drifted down a little bit. But for the most part, you don't really see much going on here. And it usually takes about a day or so for things to get going. All right, but anyway, so I tend to not do a lot Monday, but I did. And, I had a couple losses. I was a little overzealous. But the rest of the week I did fine, including today. I actually had about 4 trades on today. I think I'm still in the pound dollar, but the rest of them I'm out of for the day, and I'm good with that. So yeah. Anyways, guys, currency change, trading divergences, and again, you can do this on any time frame. You can do it as a day trader. You can do it as a position trader. If you go to a daily chart, again, these how these things look is going to completely change. But, on a daily, you're just going to have a different perspective, on how you want to, hold these things. Your perspective will be different. So that's why, I like to find these trades on, again, the 15 minute to the 1 hour. That's where I like to look for these trades. And again, depending what time frame you use, the lines are going to look a little differently. But you can still kind of get a feeling for what's happening on that day. And as soon as you feel comfortable that the market's kind of got into a rhythm for the day, that's when you pick your 1 or 2 pairs where there's divergences happening, and you trade those, and the rest of them you just leave them alone and forget about them. And you might miss a couple. There's definitely I've missed a couple where I didn't take it, and then I took a couple of trades, walked away, went back and looked at this line chart a couple hours later, and like, wow, it was a really good trade that's set up that I missed. That's going to happen, but I'm not going to sit here and stare at them constantly, because if you just sit here and stare at them, especially on a short time frame, you're going to be tempted to take more trades that aren't necessarily there when you see these little fluctuations, like, oh, something's setting up, and you think you're going to be clever and jump in, and it doesn't work out. So I just think that you just wait until you kind of see a definitive setup where the market's definitely moving in one. And you can use trend lines. I mean, like, if you wanted to look at the at the pound, right? Let's go back to the 30-minute, right? Well, I could easily, I saw this started during the London session. This is around here. This is probably the maybe early London or late Asian session. Hey, there's a trend line here, right? Okay, so this is definitely going up for the day. At any point in here, from about this point on, you could have said the pound was definitely going up for the day, right? So, you can use just visual skills and trend line analysis just the way you would on anything else. You're just looking at the individual currency. That's all. So, anyways, guys, I will leave it there. Just consider this as something else to try if you're frustrated just looking at pairs and not really understanding why a particular pair is moving. To look at a pair and say, well, it's moving, but what's moving? Is it the if you're looking at the Swiss yen, is it the Swiss or is it the yen that's causing the moving? Or is it both? Are they both? Is one strong, one weak, or is one weak, one strong, or is one weak and one's neutral, or one strong, one's neutral? Like what's causing them? What's causing that pair to move? And if I want to take a trade, ideally I want to take a strong one against a weak one. And that can change every day. There can be a different one. And the ones that are moving in completely different directions, diverging in opposite directions, those are the ones that you're going to get the most bang for your buck. Now you can take a strong one against a weak, you can take a strong one against a neutral or a weak one against a neutral and still have a good trade as well. But ideally you want ones that are diverging, okay, just going in completely opposite directions, and those are the ones that you're going to get, like I said, the most pip movement. All right. Any questions, comments, guys, please drop them down below. Hit that like button if you're just watching this for the first time. That really helps out. And hit the subscribe down the lower corner of the screen of the video here. You should see a subscribe button. You can click it there or down below the video is fine. Then click the little bell notification below here, and you'll be notified when I post a new video. So I probably won't do a weekend update only because if I do one, it'll just be a review of some of the trades I took this week. But since I only base these trades now on what's going on live, there's really no point doing a forecast because I'm not looking at the pairs. But I may do another one just to look back at some of the trades I took. But I'm not sure yet if I will have time. If I do, I will do it. More than likely be tomorrow. I would do that. So anyways, guys, I will leave it there. Hope you have a fantastic weekend, and thanks for watching, and I'll talk to you all soon.